Assalamu alaikum, everyone. I hope you are doing well. Today is Monday, May 5th, and the market is pretty much flat today. The Dow is up 0.24%, S&P is down 0.22%, Nasdaq is down 0.31%. So I'm going to call that flat and not bad considering we've been on a 9-day winning streak for the S&P, which is pretty long and pretty remarkable considering the circumstances. It does seem like the market and the economy, if we're looking at the hard data that we're getting, is very resilient and is refusing to go out without a fight. If we look at the VIX index, we're still at relatively elevated levels at 23. That's the uncertainty or fear index. Relatively, I say that because we're way down from the peak that we experienced after Liberation Day, which was close to 50. We're now at 23. But if you look at the last 12 months, we're at, excluding Liberation Day, we're basically at the highs still for that index. If we look at some of the popular names that we often look at, we did see a pullback today. Nice to see you, Rashad. Tesla is down 3%. MicroStrategy is down 3%. Bitdeer close to 8%. CLSK, CleanSpark, that is close to 8% down. That is. Bitcoin at 94,000. Doge is at 17 cents. So with that, let's take stock of where we are right now and some of the signals that the macroeconomy is giving us. We'll look at the most salient points in terms of hard data and soft data. So on Friday, we got the jobs report, and we did add 177,000 new jobs, which beat expectations, which were around 130,000. And so the U.S. administration took a victory lap after that data. All of a sudden, this isn't Biden's economy. And it's tough to say that this is something we can count on moving forward. There is going to be a period of very wacky numbers that are not necessarily on trend because of the tariffs, the uncertainty around tariffs, and people trying to front run those tariffs. And so it's really tough to extrapolate from this data in terms of the health of the economy moving forward. If you look at consumer spending, that also rose in March. And it does appear that people are front-running tariffs, expected tariffs. If you look at motor vehicles and parts, those the purchases increased a lot. And one of the reasons one can expect is that if you're planning on buying a vehicle anytime soon this year, you're probably inclined to do it sooner rather than later because tariffs are set to increase. And so that's what we saw in terms of consumer spending. Again, you're not going to get data, hard data that you can extrapolate from in these circumstances because of the uncertainty and the planning ahead that is going on by companies and by consumers. Now, because of the jobs report data, because of consumer spending data, and because the Fed seems to be data driven, but that data reflects the past, it does appear that the Fed is going to make a mistake in their May meeting, and that is to keep, at least the market is pricing this in, and the mistake is that they keep interest rates as they are. And the reason I think this is a mistake is because everything, and certainly the soft data, but also just logically, the tariffs, their impact, this is going to cause a big slowdown, I think, in spending. It's going to destroy a lot of demand. and it's going to shrink company margins, profit margins. And so uh, this means there are tough economic times ahead, unless, of course, there's a quick deal that is done. We'll talk about that later. But in light of the circumstances that we are in, and the fact that inflation seems to be under control, I'll show you in a second why I think that. I really think it's a mistake not to cut interest rates in their next meeting, but the market seems pretty certain with a 95% probability that indeed the Fed will not cut interest rates. I think they should cut interest rates in their meeting this week. And as I said, inflation does seem to be under control now. If you look at the true inflation measure, it's less than 1.5%. The Fed's target is 2%, so we're below that. And, you know, tariffs, obviously, they will have a one-time impact on prices. It's not a continuous impact. However, it does destroy demand. And so when things get more expensive, people tend to cut back on their spending. And so it could end up having a deflationary impact, not an inflationary one, when all is considered. And so as of now, Trueflation is showing us that we're at 1.45%. We're at 4.5% for the level of interest rates. So I think we have a lot of margin to move here. And I don't think anyone would blame the Fed if they were to cut, 25 basis points in their next meeting. But unfortunately, it doesn't look like that's what they're going to do. The markets, so now going into some of the soft data, the markets as of right now, I think are tactically greedy. I think there are some potential catalysts that they are seeing on the horizon. This doesn't mean midterm to longer term that that investors are necessarily bullish, but I think tactically investors are getting bullish just because there are some near-term catalysts. And so we are back in greed. Now, one of the reasons I think, sorry, I didn't notice how fuzzy this was. But if you look at the consumer confidence, it's not your eyes that are going. This is actually the image. It looks fuzzy. But if you look at the consumer confidence index, we are at lows or levels that we haven't seen in around 13 years. And this takes into account a whole bunch of factors, including income, employment prospects, and just general views of the economy. And so the consumer is not that optimistic about the economy. Now, sometimes the consumer is wrong about these things. But I do think that, a lot of what is informing the consumer's sentiment about the future is what they're seeing in reality. In terms of how their company is behaving and how they are behaving themselves with their spending habits. Now, the U.S. has approached China, and this is as of Friday. U.S. has approached China seeking talks on Trump tariffs. At least that's per the Chinese state social media. Development may be indication that China's softening on beginning negotiations. And we have seen that the US president has mentioned that he doesn't think the tariff levels will remain where they are because they are unsustainable and they should come down. The question is, when do we get a deal, and how much the tariffs will be reduced by? But the more this situation drags on, I think the more damage that is done. And I don't want to scare you too much. This is, it's early for Halloween, but, Jim Cramer did say that there will not be a recession. So I would take that as a invitation to be cautious. And certainly this is my approach. I think that there's a lot of uncertainty, and I don't think high confidence levels in either direction are justified quite yet. So I think a cautious approach is appropriate at this point in time. And I think, as always, the right approach is to play the cards that the market is dealing. So, when an opportunity presents itself in the market, to nibble on that opportunity. But I don't think, backing up the truck is necessarily the right thing to do at this particular point in time. What do I expect from FOMC? I think that the market is probably right in terms of keeping rates where they are. But we'll see. I would be pleasantly surprised if they do not. Assalamu alaikum, brother Zafar. Nice to see you. Lubna, nice to see you. Sent you an email. Okay, I'll take a look at that, Lubna. Muhammad says, Assalamu alaikum. With iron making headwinds in data center space, do you see potential beyond BTC? Yeah, I mean, that's a big part of the iron play. I mean, in their last update, they pretty much explicitly said that we're moving beyond BTC. They're essentially, going to carry through with their previous plans for exahash expansion, but beyond that, they're going to be focusing on the data center business. So the answer to this question is for sure, yes, I do see that. Yes, Qasim, thank you. Do hit the like button. And thank you, everyone. We got our last live to more than 100 likes as I was aiming for. So I really appreciate that. You guys are awesome. Rashad, if I'm JP, I will not cut just to tease the administration. Yeah, I mean, honestly, I think cutting is the right thing to do for the reasons I mentioned. I think that, yes, the economy has been resilient thus far, but it's kind of like the fool in the shower, right? So, the temperature may be fine, and you may, make the temperature a lot hotter, and the temperature may remain fine for a while, but eventually you should expect, hot water, and, prepare yourself. So I think that what the administration did was a serious headwind for the economy, and perhaps we haven't felt it yet, but it's on its way unless it changes. What do you think about HIMS and Celsius? So HIMS, Iftikhar, I think it's a good company. I think there's a lot of upside to it. I like the founder, but just some of the marketing, the vibe of the marketing is just something that I'm not comfortable with, and so I've abstained from. Well, we did make some money on it, but then when I became uncomfortable, I sold. With regards to Celsius, I'm not really sure how. Um, First of all, I'm not confident that they have a durable moat as an energy drink, or a group of energy drinks, but their performance has been quite good. Second of all, I'm not really sure how healthy Celsius is, and so for that reason, I haven't invested. Jakir, Assalamu alaikum. Alaikum salam. What is the advantage of buying a Bitcoin ETF over buying BTC? The advantage is that you don't have to worry about self custody. And that's why you pay the fees. So with that, guys, do leave a like and become a PIF member if you haven't already. Until next time, make sure to take care of yourself. Try not to see this tweet in your dreams or nightmares. I think, inshallah, we'll be fine. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.